Welcome to Talk Tickers. Today, we're breaking down U.S. Bancorp's fourth quarter 2025 earnings call. So, did they knock it out of the park, or did the market find something to worry about? Let's dive in.
Here's what we're going to cover. We'll start with the headline results, then dig into what really drove the quarter. After that, we'll look at management strategy, see how the market reacted, and wrap it up with our take on the stock.
All right, let's get right into the numbers. Right out of the gate, U.S. Bank Corp reported a solid beat on both the top and bottom lines before the market even opened.
They posted earnings of $1.26 per share, which was a nice 7 cents better than what analysts were looking for. And on the revenue side, they also came in just a little bit ahead by about $50 million.
You know, that EPS result, that works out to a clean 6% beat versus the consensus estimates. On the surface, that is a really strong print.
But what's really interesting here isn't just that they beat, it's how they did it. This quarter was really a story about the strength of their revenue mix, about diversification.
Get this, fee income made up a whopping 42% of their full-year revenue. And not only that, it grew almost 8% year over year. This is so important because it shows they aren't just a one-trick pony relying on traditional lending.
And this just shows brilliant operational discipline. Their efficiency ratio got better, which means they're running a tighter ship. Their return on tangible common equity was a super strong 18.4%, and that healthy CET1 capital ratio, that tells you their balance sheet is rock solid. It's all just solid execution.
So here's the crucial point. Management isn't just sitting back and enjoying the ride. They are making some really strategic moves to lean into that fee growth story even more.
The big headline move is their plan to acquire BTIG. This is a very clear play to beef up their capital markets business. They want to get into equity capital markets, grab more business from their existing corporate clients, and really accelerate that fee revenue growth we were just talking about.
The CEO, Gene Kede, really hammered this point home. He mentioned their decade-long partnership with BTIG and said that this move is actually being driven by client demand. That's a huge deal because it gives you a lot more confidence about the whole thing.
They're also clearly positioning for the future by investing in digital assets. I mean, they've already run a cross-border stablecoin pilot and they've got crypto custody services up and running. This is all about getting ahead of the curve and building that future infrastructure.
Okay, so we've got a good quarter and a smart strategy. Let's see how this all landed with investors. What did the market think?
Well, despite the strong report, the stock had a bit of a weird day. It popped at the open, trading up about 1.7%, but then those gains just kind of fizzled out through the day, and it ended up closing basically flat.
So yeah, that begs the question, right? If the quarter was so solid, why didn't the stock hold on to those gains?
Turns out, the answer has less to do with the company and a lot more to do with the macro picture. There was some regulatory noise about potential credit card rate caps, and that just created a headwind for the entire banking sector that day.
So, with all that context in mind, here's our take on what to expect next quarter and our official call on the stock.
Okay, so management's guidance, it really points to continued steady growth. They've got a solid outlook for Q1, and for the full year, they're targeting at least 200 basis points of positive operating leverage. That basically means they expect revenue to grow faster than costs, which is exactly what you want to see.
So, our rating on U.S. Bancorp is market perform. Look, the company is executing really well, there's no doubt about it. But that muted stock reaction tells you the market is pretty much priced in this solid performance, especially with those sector headwinds lurking.
But for a trade idea, you could consider a pairs trade. Go long on USB because of its quality and that diversified fee story. And at the same time, you could short a regional bank peer that's less diversified and more exposed to that whole regulatory risk thing with consumer credit.
And as always, this is not financial advice.